Okay, welcome everyone. This is the 2021 Global WorkTech VC Review. Happy New Year, and what a year we had in 2021. We've got a lot of ground to cover. I will address any questions that come in. Feel free to use the Q&A, and at the end, I'll take a peek and go ahead and try to do my best in answering any questions that you might have. So if you're here, you probably know WorkTech, but I think it's always good to take a moment and refresh. So at oneworktech.com, you'll find all of our analysis, all of the growth capital that's flowing into the market is covered there. And that's where the reports that you hear me reference today are found, as well as our HR Tech VC database, access to talk to us about advisory services and so forth. You can follow WorkTech on Twitter at OneWorkTech that you see there. If you're going to tweet today, please use, here I'll move myself out of the way, the hashtag WorkTechVC update. Would appreciate that. And the URL, you'll find me in many places, but please use oneworktech.com. And thank you for being here. Now let's get on with the content. Oh, one more thing, I'd be remiss. I need these slides because I just want to jump right into it. We did launch an accelerator this year, and at oneworktech.com, you will see in the nav a place to go for the accelerator, or you can go directly to impactworktech.com. We are just closing out our first cohort, an amazing bunch of mentors, operators, and practitioners, within the industry are there helping a cohort of 8 startups that are pre-seed and seed stage get to product market fit and launch, as well as some investors engaged there as well. We are taking applications for cohort number 2 through to the end of January. So if you are aware of any startups, or if you are a startup, you're a founder who's looking for some really tailored HR technology, work tech, market input from some of the most successful entrepreneurs and founders, as well as the most progressive leaders in HR and talent acquisition, and investors that are truly focused on this space, then please send them our way or come our way. And it's a really easy application process to get considered for the next cohort. Or if you're a potential mentor, you'll find a form there to let us know that you're interested as well. And let's get into it. So if you're here, you are aware of the big headlines, which, Q4 was another huge quarter for WorkTech VC investment, 4.2 billion across 75 deals. And the biggest headline is that in 2021, we had 17.9 billion of growth capital flow into the market across 374 deals. This slide, I think this visual is a great representation of how massive the year is. You see 2021 here, and almost any of the quarters, Q4 included, dwarf most years that we've had. I've been tracking the data in this space from the beginning of 2017, built a process, and I'm now leveraging some AI that filters and captures all of this data for me before it's really meticulously vetted. And we've seen such an incredible spike since 2018. The pandemic really just tapped the brakes in 2020, and just an incredible amount of VC came into the market. Now I've got at the end, I am going to get into predictions. So the big question everyone has is, will 2022 look like 2021, or could we even do better, have a bigger year in 2022? And I'm going to give you my take on that toward the end of this this webinar. So let's get into this. I'm out in the market talking about why this is happening quite a bit. But in case you haven't seen any of my columns or information out there, I think there are a few reasons why we had the year that we did. First off, as Mercer put it, dry powder met low interest rates. So a lot of cash, companies and family offices and angel investors, independent investors were sitting on a ton of cash. Access to capital, given low interest rates, was really accessible. And it created an environment where there was a lot of money looking for interesting opportunities, looking for homes, right? COVID, while it was definitely an accelerator, did not create this opportunity or create this market. Most of the trends that were accelerated had been in existence for quite some time, including remote work. So a lot of folks, woke up to distributed work and remote work during the pandemic. But in 2019, I surveyed 3,000 employers in the US and the UK. 54% of them were offering some degree of remote or distributed work, whether it was access to co-working, working from home, some part-time. So this had been growing and had been emerging. And what COVID did was just, flipped it on its head. And, anybody who wasn't on the front line started working from home, or working remotely. So this is a market that has been growing, per the other slide, the last slide, for some time. 2018 was a record year. 2019 was another record year. So, there was interest in the future of work before COVID. The other thing that happened during COVID, or at the same time as COVID, were these societal issues that really impacted the market. So, the move to experience, putting the employee first, putting the person first, putting the individual first, transparency in data, privacy, all of these things were also in play. Other things that happened, through COVID, the murder of George Floyd, the heating up, the overboiling, I should say, of the Me Too movement, putting a lot of focus on equity, diversity, inclusion, belonging. These were not byproducts of COVID, but happening at the same time. So mission-driven and ESG initiatives started to get full center, radar for investors and for HR, because that, ESG, environmental, social, and governance, HR owns, 2/3 of that. And so that's where some initiatives by the SEC to start reporting on human capital metrics and around ESG metrics started to fall squarely on HR's lap. And we haven't really even seen the results of that yet, but we've seen a lot of companies, a lot of employers preparing. So sort of a perfect storm of opportunity, and that met pent-up demand after we had a little tap on the brakes in 2020 based on the pandemic. And the market's huge, right? So I've been tracking total available market across all of the HR technology categories. I call it globally. It's, we're expanding the list of countries, but we've got, I think it's 9 countries right now. These are the primary markets when we look at the HR technology market. We're starting, and we've been led to these countries by the companies that we do advisory for. So the tech companies and employers who are curious about the size of the market and the scope. They've led us to these countries, the US obviously being the biggest market, and then UK and Germany sort of coming behind. We're starting to look at China, and we do have a little bit of Asia there, again, based on where we've been led. This number will go up this year. We've been looking at some areas like programmatic, and the opportunity that exists in Europe, the opportunity that will exist in Asia, and still the untapped opportunity in the US, although the US is ahead of those other markets. And technology there is going to that's additional spend or spend that's being sort of pulled from a service bureau type environment into this space. Also, as the segments, the smaller companies are adopting more and more technology, and smaller companies are competing for talent more remote and globally. They're adopting more recruiting technology. That's changing some of the numbers, and I expect this would be well over 400 billion when we revise this number in 2022, and we could be pushing somewhere between 450 and 500 billion. So look for that coming out soon. We've been engaged on some projects that are revising that number now. So what happened in 2021? Where did the money go? So HCM really led the market from as far as where the capital went from a category perspective. And when we look at categories, we look at the three primary categories being HCM, sort of core HR, payroll, HR benefits, talent acquisition, recruiting, and everything about sourcing, attracting, engaging, and hiring candidates. And then talent management, where you've got learning and performance management and sort of, from onboarding forward. Below that, we track about 40 subcategories that can go across these primary categories, and things like employee experience may drop in any one of these more primary categories, but it's just a way, and we will get into the subcategories. It's a way for us to look at the market rather than just saying HR tech or recruiting or talent management. We're able to get a finer point on where the dollars are going. So why did HCM receive so much investor interest? And by the way, they receive the most this year, and it's always usually neck and neck with talent acquisition. It's HCM and talent acquisition on a quarterly or annual basis. This year, it's significant that it's 2x. But when you look at the numbers in talent acquisition and talent management, both over 4.3 in TA and 4.8 in talent management, those are respectable years for all of HR tech in any year previously. So let's have some perspective on that. But some things happened where core HR really became a focal point, and the workforce becoming more global and more distributed. This drove the adoption of alternative models as well, both in the relationship with the employee around freelance, but also in alternative work models that are starting to emerge, things that we used to call like job sharing and time slicing and things like this. Other things that were happening based on some of those trends, when you think about pay equity and transparency of pay and pay data, that's an HCM issue. Benefits and mental wellness took on a huge level of importance through COVID, again, right in the core HR wheelhouse. And just employee relations and support becoming so important, and shining a light on the fact that really are the tools that we had to engage employees on answering critical questions, on providing service, on providing that sort of employee relations and support were really, we hadn't been paying attention to that for some time, whether it was in HR or from a technology perspective. And then just the data that we have in HR and the core HR systems becoming so important to making strategic decisions, not just through the pandemic, but thinking about any strategic workforce planning or strategic decisions that need to be made. That was, this all added up to HCM getting an incredible amount of attention, both from HR in the field. These are the things that they're struggling with. I moderate the HR open source group, and questions around all of these issues are the questions that are being asked almost on a daily basis there, looking for tools, looking for data, looking for information. So, and as well as the work that I do with employers, these are the conversations that we're having. And this is where the technology's been moving, and the investors stepped up right behind it. That being said, let's go a level closer to the ground, come from the category down on the ground with subcategories. And this is how it played out when the sum of the whole, right, is greater than the parts. But learning was the top subcategory or category at 3.3 billion, and not surprising given the focus on upskilling, reskilling, the shortage of available talent, the need to increase the skills, whether it's technical or competency driven skills, the softer skills, or what some people are now calling the power skills. Back at us strong, and usually the number one category, marketplace job boards, came roaring back. And we saw several rounds from Job and Talent in Europe, huge rounds from WorkRise and Andela that really bolstered this, but also a big volume of investment that went into marketplace job boards. And I say marketplace job boards instead of just marketplaces or job boards because for some reason, I really consider them all, job boards are marketplaces, they're all marketplaces, but job boards for some reason has become an offensive term to some folks, and it really shouldn't be. Job boards have led us into specialization. They've led us into matching and skills matching. They've led us into new emerging markets. They've been a real leading indicator of candidate interest and movement within the market from a talent perspective. So they really had a bad rap for a number of years that we were predicting, or I wasn't, but the market was talking about the death of the job board. But the marketplace job board is here to stay. And as we look at the emergence of more freelance and more contract and the need for more targeted sourcing and a better experience for candidates, job boards are leading the way there as well. And I've got some predictions for you again at the end of this webinar that map to that. Payroll had a huge year, largely driven by global payroll, driven by the employee of record. And in the US, we have firms that are PEOs that provide that employee of record relationship and service. But if you're growing globally and you don't have infrastructure internationally, you're at a huge compliance risk. And payroll providers like Papaya Global, who you see listed here, and Deal help employers with these different models, and especially small to medium size and even large, right? Immedis is a pure tech play for the larger enterprise that helps with compliance across 150 countries. And compliance is a big deal. It's not just a country level or sort of federal tax level. It goes down, to the local, town, city, county, province, state level as well. And it's something that you need some sort of native intelligence in order to get it right. And then you see benefits, core HR, and wellness. Here, I'll move. I'm sorry if that's a distraction for you, but I've got to keep moving myself to the left and the right there. But these all align, these categories all align with that sort of core HR. You can see how HCM got a huge bump between these 4 or 5 categories, including collab and communication. Now, what I think some folks might find interesting is recruitment marketing. If you think about the tightening of the job market, when I look at recruitment marketing, I'm including CRM, I'm including any sort of sourcing and engagement that isn't a job board, any candidate sourcing, engagement and conversion into the hiring pipeline. And I do have some predictions there, but probably no surprise, I expect to see even more in that category as well. So these are the subcategories that performed really well through 2021. Now, in 2021, we had 55 mega deals. We had these are deals that are valued at 100 million or more. And you can see that we had a whopper in Articulate. They announced it as their Series A at 1.5 billion. They had never raised money before. They're a very mature learning technology and content play. And even if you took the 2 biggest deals in learning, period, in HR tech, Articulate and Eruditus out, learning was still the top category. So a lot of times you need to look at, the outliers, and that's something that it really stood out to me about learning. This data is all available in the report, and you can play with it much the way I'm sorting it here. So we're looking at 55 deals that are mega deals. Not all of them became unicorns in 2021, but I do have a slide on the unicorns as well. So these are the investors that were behind. These are the top HR tech investors through 2021. Some interesting things happened with the investors this year, and I'd say over the last 2 years. If you look at the top list here, General Atlantic, Tiger Global, Excel, Insight Partners. These are, top VC out of Silicon Valley. And it's not that this was their first year dabbling in HR tech. Excel was involved with Brass Ring in the late 90s when I was there, but they did very little. Now, anything involved with the future of work, anything we're attracting major players, but we're also attracting a lot of smaller players as well. And I'll get into that in a moment. If we sort of sort this list and we look at the bottom of the top, we're looking at Goldman Sachs, who participated in some rounds. Fidelity participated, and the really interesting thing here is that while you may look at Goldman Sachs and say it's not venture capital, nor is Fidelity, they are participating in A, B, C rounds, and it's not just the top investors that are an anomaly coming into the space. Everywhere in venture capital, in tech investment, we're also seeing this rush of independent investors and family offices. So when we look at the smaller investors, the biggest category is angels, and it's a really interesting phenomenon that's happened. And when I spoke earlier about that capital needing a place to go, it's reflected here in both the attraction of larger firms and the attraction of smaller independent investors. When you talk about the big deals and we talk about the unicorns, these are the companies that achieved $1 billion or more valuation this past year, who became unicorns. And here, let me sort this and pull folks up on top. The valuations were just crazy this year. Now, that's not across the board. Some of these valuations are well positioned and well earned, but there are valuations that we've seen that are 40, 50x from a revenue perspective, and that's that I would keep my eye on valuations. I think there are definitely some overvalued players out there. It's feeling very bubble-ish for those of us who lived through the bubble, the internet bubble. At the same time, the market's still really frothy with investment. There's some big funds out there. What you have to start looking at is capital efficiency and how these companies are spending, what they're spending on, and then also look at their revenue that they're generating, and you start to get a picture of stability. So to have a multi-billion-dollar valuation and not have the revenue to back it up, if you continue to raise and you're successful at that, you can become too big to acquire. And then going public an IPO doesn't look like a great option at that point either, because you don't have the metrics to back it up. And that's the slippery slope that I hope some of these vendors are not on, but that I fear, we may see. I had a call earlier with some folks, and they were asking me about the potential for more zombie players in the market. I think as long as the economy is growing and companies are able to, sell more product and have easy access to funds, we're not going to really feel or see the zombie vendors, meaning, they're selling enough to keep the lights on. Their investors have sort of walked away, and they're just sort of treading water. They don't have the metrics there that would drive an acquisition. And we saw a lot of that in this category in 2015, 2016. But we haven't, experienced it or noticed it because the market's been so frothy. But I think there is a risk of, especially with any economic downturn, with that starting to happen. And you've got to look at this list and just be amazed. German player Impersonio with a $6.3 billion valuation. Europe's a huge market. They're not a big player in the US, if at all. You've got to expect them to come to the US. BetterUp is one of those vendors I would keep my eye on. They're driving a coaching marketplace and a wellness offering via marketplace that, and they offer therapy. And that's a model that, I have a hard time seeing scale because the quality of the coaches goes down as in order to scale, you need to pay your coaches less, increase the volume, the number of coaches. And as I'm talking to employers, most of them are leaning on internal resources as their core cadre of coaches. So I think it's going to be interesting to see where BetterUp lands in the next couple of years. Also interesting are the recruitment automation players like Eightfold and Paradox. Very different profiles as far as the way they've raised money. Paradox being very capital efficient and driving more traction and adoption and sort of meeting the customer's need where they are before going out for that big round last month, the 200 million that brought them to the 1.5 billion valuation, whereas Eightfold is more of a classic sort of Silicon Valley, raise it if you can and go for broke, spend. I'm a little dubious of Eightfold if you haven't picked that up. So there are the unicorns and there are the valuations, and I'm available to talk more about that if anyone has any questions. What about the early stage? When I put this out, I said, it's not just the big deals, but also the early stage players that we need to think about who's investing there. And for any vendors that are early stage, this is a lot of times the most interesting conversation they want to have. I looked at rounds that were under 5 million and that were pre-seed, seed, and I included rounds that were tagged as a Series A. There's no real rule of thumb on other than the order that these rounds come in for, whether it's an A or a B round. It's just, when they happen and how the vendor and the investors want to position it. So I included the A because a $5 million A round these days is fairly small and reflects an earlier stage Series A. So 784 million went into investments that meet that criteria. And there were 109 early stage investors that participated. You can see the angel investors in here. Let me sort this one so that you see, angels by far were the number one category. And well, I say 109 investors, when I talk about these investors, this is where angels were in the lead. They were leading these early stage rounds. And when I look at investors, that's where I focus on lead investors, those that are ending up on the board. They're bringing the deal together. There could be 2, 3, 4, 5, 15 investors participating in a round at any level, but these are the lead investors. And something interesting here, when you get access to this and you scroll through the list, you'll see Bain, you'll see Norwest Venture Partners, you'll see some other major brands. I want to say Andreessen Horowitz pops up somewhere on this list, GSV. These are not tiny VC firms, right? These are not small boutique VC firms that are playing in this space and playing at an early stage. These are some substantial VC firms that are also participating now at earlier stages. So some of the rules of thumb or some of the experience that we had years ago, Madrona, another one, right? Some of the rules, those experiences that we had with where these investors played, the size deals that they limited themselves to, it's just out the window now for both the large and the small. We're seeing small investors group together and participate in really big rounds. Jason Corsello at Acadian doesn't come up on this list because he's generally not listed as a lead investor, or Acadian isn't, but they're participating in some huge rounds, and smart recruiters, right, who hit unicorn this year, but they're not going to come out as a lead investor, but he's pulling together a number of angels, a number of operators in our space and participating, behind the larger players. So it's a really interesting dynamic that's happening, and it doesn't make it any easier to raise money if you're an earlier stage investor, but it does show you that the number of funds that are participating, the number of firms that are participating at early stage, and is growing. And you shouldn't limit yourself to who you're talking to. So I also said in the run up to this that I'd be talking about who the investors were that were participating, sort of by category, leading by category. General Atlantic stands out in the sense that they put a ton of cash into both talent acquisition and talent management this past year. They also played in HCM just at a smaller scale. But again, names like Tiger Global, who is really reinventing sort of their approach to venture capital. A lot's been written about them. You'll notice Y Combinator, the YC Continuity Fund, who came up in HCM and is participating in larger rounds, not just the smaller rounds driven by their Accelerator. So anyhow, it's a real blue chip list, and I think I've sort of beaten the horse on the changes in the landscape for investors. And as you get access to this, it'll be interesting for you to see the different players that are investing in the different categories, because it does change. I'm talking fast. I'm throwing a lot at you because I do have more ground to cover. And I want to make sure that I have some time for questions and those predictions as well. So when we look at the amount of time that I've been covering this data, I think I mentioned earlier, if not, there's been $33 billion invested in WorkTech since 2017 across almost 1,300 deals. Now step back and think that 2021 was about 18 billion of that. Over half of that came in last year. It really just puts a finer point on how massive 2021 was. You can see while last year certainly had an impact on the balance across the major categories, you do see a little bit more leveling out across the categories. Talent management would usually be far behind talent acquisition, but also in the last few years with the focus on learning and upskilling, there's been a lot of money, as we've witnessed, flowing into that category. Average deal sizes, a lot of smaller deals, smaller average sizes in talent acquisition. That's historically accurate. A lot of larger deals in learning and HCM, core HR. So nothing unusual there. When we look at the last 9 years, the years in orange are where, so 2012 to 2016 are where I've taken external sources, and we've done our best to sort of pull together what those years looked like. There wasn't a lot of great tracking prior to that. And when we look at 2017 forward, the blue years, that's WorkTech data, the data that we track. Now, we track from over 100 sources. There's a process that's used that some of it just has to be manual, but we do use, thank God, in the last 2 years, we've been able to implement some AI that helps us sift through the data. You won't find these numbers, commensurate numbers, anywhere like Crunchbase, although, we use Crunchbase. You won't find it at CB Insights. That's because of the vetting that takes place. So it's understanding what subcategories and what categories to put the deals in. It's understanding where they fit within the market that I think really makes our data sing and stand out for corporate development groups, as well as corporate funds and venture funds and vendors who are looking to make acquisitions. We've got an incredible lens on that space, and for buyers as well. So getting a view to what's coming, what trends are coming, what technology is coming down the pipe. That's where the database really sings for WorkTech. So I just can't get over 2021 and what a year we had. But you might be here for predictions, and I've got some. I don't normally do a ton of predictions, but let me move myself there. But let's get into it. A lot of folks have been asking me, what's going to happen next year, and these are not all predictions, by the way. I don't have that many, but I want to start sort of from left to right. Thinking about, we need to think about what's happening in the world, the macro influences that create the trends in HR, what the employers I work with are focused on, what they're doing that then result in what we're actually seeing for trends in the space when it comes to investment, when it comes to buying, et cetera. So we've got low unemployment, and that doesn't seem to be going away anytime soon. It's a very tight job market. We've got rising wages. We've got a strong stock market, and all of the predictions are for those things to continue. I watch all of those VC firms and what they're doing on the back end. Massive war chests have been built with both private equity and venture capital. Again, there's cash that will be looking for a home. Now, the pace at which they invested and where they invested is all relative to what's happening in the market, but they have not been, they've been raising their funds and new funds and diversifying, clearly anticipating going out next year and investing. There's also uncertainty. We don't know what's going to happen next year. But if we've learned anything, it's that the global economy and definitely the U.S. economy is incredibly resilient, and the U.S. being the biggest addressable market in our space. A couple other things that I look at, Deloitte does a CFO survey. 97% of them expect to increase their spend next year on labor. So that's everything from headcount to everything that supports it. They're increasing their spend on capital expenses. They're expecting hiring and compensation to go up in Q1, where we sit today. They view talent as their biggest priority and their biggest external threat. So we've got the CFO laser focused on this category and everything talent. Wilmington Trust does a business owner sentiment analysis. It's extremely credible. We're almost back to pre-pandemic optimism. So 77% of business owners are very optimistic for their business in 2022, and pre-pandemic was 88. So I think it bottomed out in the 40s or something like that. So that's something to think about. Analysts from the Federal Reserve came out in the last quarter and said GDP growth, the term real GDP growth in the US, gross domestic product, at 3 to 4%. That's very healthy. Regardless of interest rates, it looks like full steam ahead from the economy's perspective. Now, so what are the dynamics that we're dealing with in our space? Again, increasingly tight labor market. You're going to see any tools, anything, any services, any technology that's going to help an employer, find talent faster, find more quality talent, is going to soar in 2022. That's low-hanging fruit. Anybody can make that sort of, it's almost a cliche prediction at this point. What we will see, though, is a bigger shift even bigger shift to freelance and contract. I've been talking about the shift to this. This is not gig economy. This is not Uber drivers and food delivery. These are professionals working in the enterprise, and even skilled labor that's working on a freelance or contract basis. An even bigger shift there. And I've been talking about it since 2013, and it has been increasing year over year drastically. And 2021 was the biggest year for it from a dollars and cents perspective. And now we're going to see technology really catch up with it from both an HCM and a talent acquisition and management perspective. So the CHRO does not care whether you're a freelancer or a full-time employee any longer. The CEO cares even less. They care about having the right skills in the seat at the right time and the right people on the team and dealing with it from there. So we're going to see a lot of shifts and a lot of changes there. Alternative work models, separate from the relationship with freelance or contract, we're going to see even more creative ways, right? Like think about the Mom Project and what they're doing to promote alternative work models for women that are returning to the workforce. It used to be just moms. Now it's more broad from a market perspective for them. But this is an area, and it's not just about women, and it's not just about moms. This is an area that we're going to see a lot of movement in because, again, this tight job market, and it's difficult to retain talent. So think about companies in Europe like Job and Talent. It's something that we don't see a ton of here in the US, where they really operate as more of a staffing firm with a tech enablement. And they're putting everything from hourly workers to contract and skilled labor. We're going to see that sort of model where the employer gives the job to the platform and the platform delivers the employee, not delivers the resume. And we're going to see it in a more freelance basis, right? So things started to happen and moving in this direction. Bullhorn acquired a workforce management player last year. I can't remember the player's name, but if you think about how staffing firms and RPOs have this opportunity to become a source of employee and not just a source of candidates to access, I think we're going to see this in a big way. In the market outside of HR, we've seen this big trend that I follow. Professor Scott Galloway. I love a lot of what he talks about, and he's onto this idea in the consumer world of the super app. So bringing fintech and delivery apps and entertainment into one platform in order to go up against the Amazon and like the Google search results. Think about the talent super app. In HCM, we sort of have it with payroll and talent management, but think about bridging the external talent. I'm not talking about talent pools, that's voodoo. I'm talking about job board marketplaces and the kind of model that I just talked about, bridging that with your internal talent management and workforce. I think we're going to see some acquisitions take place that start to move talent-oriented players in this direction, and I think it's going to be huge. To not talk about automation in predictions would be short-sighted, given 14,000 recruiter jobs were just posted at the beginning of this year. We don't have the recruiters to keep the process moving. We had I talked about the employee relations and communications and just being there to engage with employees. But not just around transactions like benefits and things like this, but being there for them and giving them a conduit to the information that they need. Automation, conversational AI is going to win big in 2022. It's going to win transactionally with things like scheduling. It's going to win strategically in areas where we need a new interface for HR and for recruiting with the humans that they support. And we're not going to provide a better experience until we have that interface more broadly adopted internally and externally. And that's what's going to happen. because it has to happen in order for businesses to meet their goals. At the same time, I talked about recruitment marketing earlier. Smart marketing and smart spending wins. So I've been doing a lot of work looking at programmatic across the US and across Europe, and the sort of immaturity in that market. You're going to see, I say this year, it's going to be a lot of education, a lot of buyers, a lot of end users that are now talking about programmatic and talking about how to be more intelligent with their marketing and advertising spend. You're going to see that level up, and you're going to see more adoption of programmatic technologies. You're going to see recruitment ad agencies become more viewed more strategically in where they sit in helping their customers do this, and become more tech forward. And there's a huge opportunity with RPOs and staffing firms for this technology as well. Analytics, anything from a talent analytics perspective that helps look at the spend and look at how that's playing out is going to be huge, excuse me. And then recruitment marketing is going to have another big year, just given how tight the market is. And these are the areas that the employers that I'm talking with are looking at as well. So that being said, what about, the VC stuff? The pragmatic side of me and sort of the M&A side of things in the market, what predictions do I have there? The pragmatic side says, 17.9 billion last year, we can't do that again. I think given where we are now in Q1, we're already pushing $1 billion in Q1. We're just a couple weeks into this. Given what I told you about the VC firms, PE firms, I'm hearing from a lot of corporate funds that are either in play or starting up focused on this space. The Impact WorkTech Accelerator has a number of investors involved. And so we're sort of fulfilling that new breed as well. I think we're going to see, I think we could see an even bigger year in 2022, barring any tectonic shifts in the economy. We're going to see M&A increase. We're already seeing a number of strategic acquisitions, but it's going to become, in this market, it's important for larger vendors to fill gaps in their roadmap, to fill gaps in this shift to automation, to fill gaps in this shift to supporting new relationships with employees and experiences and work models. If the market turns, we're going to see a few players become incredibly acquisitive, and we're going to see the minute there's a bump and the investment slows down and valuations settle down a little bit, then we're going to see an incredible frenzy of acquisitions take place. I'm helping a few folks get a lay of the land from a market perspective to do just that right now. So that's something I would watch for. Yeah, look for strategic acquisitions to increase. And then if there's a bump in the road, even more acquisitions. That's something that you can all anticipate. Now, here's one that if you want controversy, is this year the start of the end of Workday? Now, I'm not a Workday basher. They've really moved the market to a great place from the CFO's perspective on HR, from the engagement at a global enterprise level in cloud-based HR systems. But it's not nobody has any fun using Workday if you're in our space. If you look at Workday and you look at its predecessor from a founder perspective, PeopleSoft, you really quickly see that everything goes in cycles, and that Workday's been following a PeopleSoft playbook. And you look at this need for a new interface, you look at the need for better experiences. I'm not saying Workday is going away, but I think this is the year that some of the players that have been playing nicely with Workday and integrating to Workday and the other platforms who offer these automation interfaces, conversational interfaces, this is the year that they're poised, given their customer base, to start going after the core platform market. And we're going to see some new entries in that space as well. So watch for that. And Workday is not going to be number one forever. And I'm saying this is the year we might start to see some chinks in the armor. And I would love to engage with anybody from Workday to convince me differently. Also, we will see some IPOs this year, if successful IPOs, if not attempted IPOs, because some of these players have just become too big to acquire, given their valuations and where they are, and they're going to need to go IPO maybe in the second half of this year in order to raise the money that they need. So that is it. I'm wondering, do we have any questions? I need to give you the disclaimer. I'm not a financial analyst. I'm not giving you investment advice, but I do encourage you to look at our data to get a feel for what trends are driving the investment and what trends are driving the buyers in the space. And let's see, do we have any questions? So, question about M&A activity, and I think I've answered that. Yeah, I do think there'll be much more M&A activity this year. Do I expect payroll to have another big year? I do. I expect that you'll see, when I talk about payroll, I mean, I don't know any new breed payroll vendors that are not core HCM providers as well, right? And I think what we're going to see, well, the big players like ADP and Ceridian Dayforce and other pure, payroll players, they're not going to go anywhere, but I think we're going to see some new platforms emerge that are truly global. And there's a lot of that happening already. Here's one in chat. Did you see any shifts between US and Europe, Asia focus and investment in the past years? Yeah, I think this year, for example, the UK had 47 investments, which was a really big year for the UK. France had like 15. So in Europe's always been, the US is just ridiculously big as far from a VC perspective and Wild West, whatever you want to call it. Europe's always been, in the shadow, but we've seen an increasing number of funds that are focused there and investments going in Europe. One of the really interesting things that I'm seeing is South America, where we've seen some interesting deals across the board from HCM, from benefits perspective, as well as talent acquisition and talent management in Brazil and Chile, and then up in Mexico, there were one or two deals as well. So some emerging markets are starting to rise. And that's not just the, GymPass came into the wellness market this year. That's not just that GymPass deal. There are other, focused opportunities or companies that are seizing opportunities there as well. Let me see. I had one more question about the accelerator. So if you've got, what stage is it focused on? Pre-seed and seed, companies that have a product, companies that are looking for help getting the product to market. And I don't mean marketing the product for them. I mean, achieving product market fit, building, what does early stage marketing look like? What does early stage product management look like? What does early stage sales look like? That's a great candidate, but they've got something that we can sink our teeth into, even if it's a beta or a MVP, which I'm not crazy about minimum viable product, but it's a term most people associate with. If you're in that group, or if you know of someone in that group, please bring them to our attention. So we're at time. I don't see any other questions that I haven't already answered. And I really appreciate you all being here. The recording will be up on the site. We're doing something a little new. We're opening this up. So not just for Market Insider members, but we're taking a a stab at making it open. It will also be on our YouTube channel, which we've also opened up now. So all of our founder interviews and any analysis that we've done that we've put on video is available there in one place. We've also got a video page on the WorkTech website that is essentially the YouTube channel, so you don't have to leave WorkTech to get access to it all. So look for it there and look for it wherever you find WorkTech. Thanks for the questions, and thanks everyone for being here.